Singapore's Purchasing Managers Index has expanded for the 12th straight month. It's been boosted by more new orders and new exports after dipping slightly in May. Chua Tin Tian tells us more.
Singapore's factory activity has remained unfazed by the stricter COVID-19 measures put in place last month. The Purchasing Managers Index in June expanded slightly by 0.1 point from the previous month to 50.8. A demand for pharmaceutical goods is helping to boost output.
The ramp up in terms of a lot of the vaccine production, the test kits, and a lot of the medical components that's related to the pharmaceutical industry, to basically combat the COVID situation, both domestically and elsewhere. That would probably be one of the key pillars of growth.
The organization that publishes the monthly data also notes that semiconductor companies are still rushing to fill orders amid a protracted global chip shortage.
Electronics PMI has actually continued to expand, and we do see that it will continue to expand because of the order backlog.
The PMI for electronics is up by 0.2 points in June, and MISPO expects it to continue expanding until the end of the year. But despite a year of expanded activity, those whom CNA spoke to say the recent resurgence of COVID-19 cases in the region remains a cause for concern.
The facilitation of movement of people and also goods and in particular components that are necessary for the electronics supply chain may actually be affected. Disruptions to the supply chain probably would have added to some of the concerns about raw material shortage and also component costs going up and the pressure really from higher input prices.
Analysts say growth will also depend on whether Singapore can relax more pandemic measures come mid-July. Now, it will also depend on how fast the country and the world can vaccinate their populations. Still, manufacturing remains a key driver of GDP, and they expect this upward momentum to continue for the coming months.